Hello, my name is Alex Turner, and today I will be informing you on the stock market, specifically on the pros and cons of the stock market. So imagine yourself on a floor full of stockbrokers on Wall Street looking for the next lotto winning ticket. Investing will prepare you for the future as inflation will happen with time, which means the economy and value of the dollar might go up, and have some knowledge of how the stock market works. It will give you an extra edge or step ahead of your generation, as most people don't understand how the stock trade works. For me, the questions that pop up about the stock market are: who controls it? What is the reason why stocks go up and down? When this happens? Where all of this occurs? And why is there a stock market, and how a stock changes? For the people that don't know what a stock market is, it is a loose network of stocks, or also called shares, that are publicly held companies and are sold and traded through the stock exchange. The stock market is available all over the globe, but the world's largest stock exchange is the New York Stock Exchange in New York, while the biggest online one is the NASDAQ. The average daily trading value was approximately $169 billion in 2013, according to the NASDAQ website. A stock is a small piece of ownership or a company that can be publicly bought, and the reason why people buy stocks is to at some point make a profit. Owning a stock means you are entitled to your share of the company's earnings and technically own a very small percentage of a company. Stocks move up and down daily, and there really is no certain prediction on what can happen to a stock. Because of this, there are risks and benefits of investing into stocks from the stock market. Stocks constantly are being moved up and down, but what goes up will someday come down, and that is exactly what stocks do. There is not one person who controls the stock market. It's more of a committee, as the public population are the majority of users in the stock exchange. And also, major companies and brokerage firms are the ones who have the ability to drive the price of the stock up. People that have the financial power to buy millions of stock, very wealthy people, are capable of driving the price of a stock up as well. Also, purchasing more stock will drive up the price, while selling it will bring the price down. Supply and demand comes to a conclusion when a stock is being sold. To successfully invest in stocks, you have to be willing to accept the risks of the stocks plummeting and falling. The pros of investing into the stock market are that you have the opportunity to own a very small percentage of a company, which is very cool. A stock comes with uncertainties, and when a stock's value declines, you lose your initial investment that you began with. You can wait and sit on a stock if its value is dropping. That is, if you are planning on a long-term investment for the future. For example, if you wait 10 years for a stock that you bought for about $10, most likely the price is going to drive up substantially if the company has gone well. And some cons of the stock market are that it can be time consuming, loss of money, and recovering time from a fallen stock. A stock's value will drop at some point over time, thus meaning you might buy or sell at the wrong time. And this is an example. The stocks listed on the NASDAQ stock exchange lost 78% of their value between 2000 and 2002, according to pros and cons of the stock market website. And to conclude, I have discussed some of the pros and cons of the stock market, and I hope you guys learned something today. Thank you for watching.